Right now, the world is fraught with some political volatility, as well as some economic volatility. But navigating the path forward is really going to require a steady hand and an unwavering commitment to compassion. Now, as we grapple with some of these recent events that has surrounded our former President Donald Trump, we need to face challenges head on with empathy, as well as a willingness to adapt. So with that, I'm going to kick it off with number 1, economic and stock market risks. The tragic events surrounding the former president have sent some shockwaves through the market, and there has actually been a rally in a lot of different safe havens out there. Now, while the immediate political reaction has shown signs of increased civility, we really are taking a look at the long-term implications, and this is really uncertain. Now, as we await for the polling data and all that's coming out from this, there has been a lot of adjustments that have really started to happen, and there's heightened unpredictability that's really starting to show now. Now, on the economic front, this is really starting to show between CPI and PPI. So the core consumer price index versus the producer price index. And there's a complicated picture that they're really weaving right now because there's what we call dovish CPI data, meaning that it's getting better in that we actually have glimmers of hope. But the PPI, what we're having for input costs into wholesale manufacturing, is actually starting to go back up. So this is really coming down to those dynamics that I'm seeing with respect to the lead stages coming to the lead 3, where we have a slowing of growth of our economy, but sticky high inflation. And that may be here for a period of time to come. So that's a little bit more of the risks of the markets that are out there and could really persist the remaining portion of this year. Number 2, portfolio changes. In times like this, when we see a lot of what we call event risk, there's not a lot that you can do with respect to predicting what's to come. But when we take a look at having what we call a diversified investment approach, that can really start to pay dividends right now. You see, this was all based upon what we call the modern portfolio theory, and it really is to try to provide some stability and resilience. But what we're actually starting to see is that you have what we call correlation happening between stocks and bonds. They usually go up in the same time, in the same manner, maybe not by the same amount, but that does not provide really diversification in that manner. But one of the things that we're starting to see that we can be adding more into the accounts are different types of investments called managed futures, gold, alternative investments. Those are all ones that could possibly go up when the stock market is going down, or vice versa. Now, this is really helpful because when we take a look at all the volatility and the risks that are out there that we were just talking about here, this is exactly the time that we may want to branch out from just the stocks and bonds approach. And we can add in other types of investments to help grow and provide some of that stability for the account, even when there is an event that we have no idea about or could not have predicted. So rather than actually just sitting back, this is where we can be making the changes and adding in some very strategic ones, like what we talked about here, maybe some managed futures. Gold is always going to be a safe haven when times are in trouble. And then also some of the other alternative investments may actually be able to help really reduce the volatility of the portfolio while still providing some of the growth that you've come to expect. Number 3, wealth management and advanced planning. As we're looking at your overall wealth plan, there's a lot that goes into it, but one of the important areas is a good strategic tax plan. Now, that is something that we've been talking about really the first part of this year, and we dived into a lot of different details on taxes. But one of the best ways forward that the government has given us in the last number of years is actually one that we have not touched upon yet. That would be the qualified opportunity zone. Now, why this is really important and the ways that this has come about from the Tax Cut and Jobs Act is because of the fact that it's helping to revitalize a lot of different areas. Now, yes, you may be thinking that this is a really low income area in a very destitute part of the country, but that actually is not necessarily the truth. There are many areas that qualify for these opportunity zones in many different states that are really good places to not only invest into, but also can benefit the broader community. Now, here's the thing. Here's why this is so important. Because yes, we get to put money to work. Yes, we want a little return on that money that we can be growing and using in the future. But the benefits is really coming back to the positive impact on your taxes. Now, what this does then is really take a look at all of the different ways that we can be working with, say, taxes today to actually postpone some capital gains. So whether you've had a farm sale or a business sale, or even just have some highly appreciated stock that you have sold off, we can take those gains, we can put them into an opportunity zone, and we can actually defer the payment of tax on those gains. And we may even be able to do some other tax adjustments along the way, which would even further reduce the possibility of tax owed. So this is a really important place that we could be working to do some tax strategies around. And that makes for some good wealth planning. Number 4, our second opinion service. The theme for today really surrounds uncertainty. Now that is actually true for the ones that you care about as well, whether they're coworkers or even loved ones. You see, they have sometimes some doubts and fears about their own wealth plan. And what you can do is help to reassure them and give them the confidence through what we call a second opinion. Now, when you introduce them to us, they're going to go through what we call a discovery process. We take a look at where they're at today, where they want to go in the future, and then help to identify if there are any gaps in their plan. Now, when we do this, we can start to take a look at all the different areas that we may need to make some adjustments. And if done correctly, that'll help put them onto a little bit more of a successful path forward. But just know this, that no matter what, if they are going to be implementing some of the plans on their own, if they choose to work with us, or if they're in a great place and no changes are needed, you've really shown them all of those opportunities, and that helps to reduce the uncertainty that they have with their wealth plan. So with that, please contact us if you would like to introduce us to one of your colleagues or family members to go through a second opinion. Now with that, I know that there's been a lot that we have covered today, and feel free to reach out with any real questions or anything that's on your mind as it comes to your overall personal wealth plan as well. Take care.